Hey, my name is John Stevenson, and welcome to the Guaranteed Retirement Guy Show. Today, we're going to be talking about how to make sure that your spouse is taken care of if you should pass away. Now, I bring this up because a lot of you that reach out to me are married. And if you're not married, you're thinking about getting married, or you're thinking about joint income payouts, and you want to make sure that significant other is taken care of if you should pass away. And this is for me very personal because, my wife is 4 years younger than me, and I do all the investing in the house. And she is a wonderful mother, a wonderful wife. She takes care of our 5 children. And that is a huge job in and of itself. There's so much that she has to do that she relies on me to make sure that we're preparing for retirement, Although I don't think I'm going to retire anytime until after maybe 80 or 90, just because I love what I do and I love being able to help people with guaranteed retirement income streams. But what I do to take care of her is obviously I invest, I take care of our money that way, but at the same time, I am going to put into place annuity contracts for both of us so that if something happens to me, she is able to basically pay the bills. And if she wants to go work, she certainly can. But I want to set aside enough where the annuity contracts that we have will actually provide all the income that we need all throughout our retirement years. Okay, so that's something to think about if you're married or you're thinking about getting married, or even if you're not married, but maybe you have someone that you love that you want to financially support if you pass away. There are annuity contracts that will allow you to do that. And annuities are great because they're contracts. They don't require a lot of thought after putting them together because they're put in place so that you don't have to manage investments. So that you don't have to worry about, what dividend stock should I pick? Or what was my husband or my wife doing with our finances? Like, how are they investing? How are they making things happen for us? Instead of having to worry about that, when you got income coming from a guaranteed income annuity, there's just nothing really to worry about. You can throw the money in savings or investments or whatever, but as long as you got that guaranteed income coming in, you really don't have to think about that. And so that's what I think about with my wife. And I want to make sure that she's taken care of if something happens to me, that the income will continue to her without her really having to deal with any other outside investments. So of course, I'm talking about annuities because I specialize in annuities, and I specialize in hundreds of annuities. I work with all the carriers, I work with all the products, and I look at the highest annual income payouts possible for my clients. And so if you're thinking about an annuity for yourself, okay, and you want as much income as you possibly can get for yourself, and I'm going to show you here real quick on my computer exactly what that looks like because I want you to see what these payouts are paying right now. But if you're thinking about that, and you're thinking, hey, I'd like to have an annuity contract put in place for myself, or if married, especially for my spouse, then I would invite you to book a call. There's a link below this video. It goes directly to my calendar. You can go to my website, johnstevenson.com, and you can actually mess with my annuity calculators there, and you can find out what the payouts would be for your specific situation. And then at that time, if you'd like to reach out, you can. There's a link to book a call there as well. So let me share my screen, though. I wanted to show an example. This is someone who is in Arizona, and they're married, and they're both 60 years old. And I just did this just for simplicity's sake. Most of the time, our spouses are older or younger, of course, and my spouse is 4 years younger than me, so the income is based off of her age, really, instead of mine. And the fact that she's a female, she's going to live longer than me statistically, and so that does affect the payout as well. Okay, so if I was to put $400,000 in, and let's say I just wanted immediate income, okay? You can see right now Prudential is the highest payout, and they're paying $26,000 out guaranteed for the rest of both of their lives. Okay, so this is important to note because the insurance company knows that people in their 60s are most likely, at least one of them is going to live to their mid-90s. At least that's what statistics are showing right now. So that's like another 35 years. Okay, 35 years of income. If you're looking at that, and we'll look at deferred amounts here in just a second. But if you look at $26,000 times 35, it's $910,000. They know that they're most likely going to pay out probably close to $1 million in pension income. Okay. And it's great for these people because they know that the income is guaranteed. It's never going to go down. And they might have other payouts from another pension or from Social Security that they're counting on later. Or maybe they're even working part-time, but they want to be able to retire or semi-retire right now. So this is an option, especially when you're younger. Now, most of us, we tend to think of retirement as maybe a little bit later, but not all of us. I mean, I have people reach out that want to retire right at 60. Some people want to retire at 50. So, but if you're like, a lot of people where they reach out and they're thinking, well, I want to retire at like 65 or 67 because I want a full retirement for Social Security, or I want to wait till Medicare, or, something like that, then you might want to put money into an annuity contract early just so you can have the higher income later on, because annuity contracts, when you fund them earlier, you have a lot of guaranteed income from the same premium amount just because you gave it to the insurance company longer. All right, so if I was to pull this out, let's say 5 years, okay? So let's say we've got access to our 401k money after 59 and a half, and we're like, all right, I want to transfer some of this. I'm going to stay working, but I'm going to do an in-service withdrawal. Okay, so I'm going to take this and put it into this annuity contract, and it just transfers from your 401k to an IRA, and then you got this annuity contract sitting inside of it. Well, you can see the difference is quite a bit. Now it's $40,000 versus what, 26? It's a huge jump in just 5 years. And this is coming from ClearSpring. And then you got Corebridge right below them, and then Delaware. And you got all the other options. There's lots of different options here. But if you're looking for highest income, right now, ClearSpring is it. So if you look at that and say, well, that's $40,000 a year joint income, is that guaranteed for life? Absolutely. You can see right here, if there is no index growth, because keep in mind, this is an income rider. It's tied to a fixed index annuity. The index portion only affects the account value and the death benefit. It has no bearing on the income. The income is contractual. It's guaranteed. Okay. That's why you see in the guaranteed values right here, it is showing $40,000 per year for the rest of your life. And it is showing the account value going out by the time you're 73, 74. But again, you're setting this up for pension, not for legacy. Okay. There are other accounts for legacy. Anyways, so if we go down to the hypothetical, the only difference is, you notice the income is exactly the same, but the only difference is that account value lasts until you're 80 years old. And so either way, it's going to run out. It's nice to be able to see, hey, if we have growth, the account value, and therefore the death benefit, which you can see over here, that definitely lasts for as long as the account value does. And so, but the income there, that's guaranteed for life. So if we look at that $40,000, it's like $1.2 million. That's great. So by the time you're 95, you've taken out that much money. It's a lot of income from just $400,000. So this is what I would recommend if you are married and you're thinking, I really want to make sure that my spouse is taken care of. I want to make sure that they don't have to worry about money or income. I want to be able to make sure that they don't have to worry about trying to generate income, either from our investments or from another job. Then I would highly encourage you to think about purchasing an annuity contract. Just like life insurance is a contract that protects us against, really against loss if we pass away too early. An annuity contract protects us against loss, longevity loss, because if a lot of times if we live too long and we outlive our assets, that could be a big, big problem, big expense, big burden on ourselves, on our family later on. So it's always prudent to think ahead and think about what is life going to look like in the next 30 to 40 years. And so I highly recommend looking at the annuities that are available. And if you are thinking about purchasing one for yourself, I'd love to help you. You can book a call. Again, there's a link below this video. There's a link on my website, johnstevenson.com, and you can check out the income calculators there if you'd like before booking a call as well. So I'm not going to try to hard sell you, but if you are looking to purchase, I'd love to help you. So anyways, I hope this video is valuable. I appreciate you tuning in, and we'll see you next time.